In today's video, I'm going to be talking about how the economic news calendar affects my personal trading strategy, and more specifically, how that 1:30 p.m. high impact release can be used to accurately predict what New York Kill Zone is going to do. Now, if you're in Eastern timing, I'm talking about the 8:30 a.m. release. It has a 75% chance of playing out. So if you want to be on side with those probabilities, then this video is for you. So let's get right into it. What I'm going to be showing you today obviously applies to New York Kill Zone because that is when the release is. Now, more specifically, we're going to be talking about two daily cycles, the New York continuation and the New York reversal. Now, if you don't already know what daily cycles are, essentially, once I know where the daily candle is likely to expand to, I go onto the intraday and I look for one of these daily cycles, which are frameworks using the kill zones. And essentially, it's going to tell me when price is likely to form the bulk of that daily expansion within that daily candle. And from there, I can go ahead and accurately get my entries and exits on the intraday timeframes. So I'm going to explain these two daily cycles to you, and then we'll get into how the economic news calendar actually affects them. So we'll start out with the New York continuation cycle. Now, I'm going to be giving you examples in terms of a bullish context. So if you want the bearish version, just flip it around. So let's say, for example, you have a bullish liquidity target, right? You have a liquidity target you're expecting to get hit. Now, this cycle forms when London Kill Zone, which is going to be the purple box, impulses towards the liquidity target. Okay, so London session will impulse in your favored direction towards the target, but it won't quite reach it. And then in between sessions at the end of London, price will actually retrace. Okay, it'll retrace back into the leg into some kind of bullish PD array. Okay, now what we're expecting from here is for New York session to continue that impulse towards the liquidity target. So we're waiting for New York session to open up, and then within there we're looking for a liquidity sweep and an entry, and from there we can very accurately predict where New York session is going to go, right? Which is going to be towards that liquidity target that London started the move towards. Okay, that is a New York continuation cycle. And when we think about the timing for this, okay, this low, we like to see that form between 1 and 2 p.m. And you're going to see why this is very, very important for the economic releases when we get onto that. So that is the New York continuation cycle. Okay, now the next daily cycle that what I'm telling you today is going to involve is the New York reversal cycle. Okay, so again, let's say for instance we have a bullish liquidity target that we're expecting price to reach for. Now, unlike the New York continuation where London pushes towards that target, we're actually expecting London session to do whatever. Basically, it can move towards it, but a lot of the times you'll find that London session will either move sideways, right, like a period of consolidation where it doesn't really go anywhere, or potentially it will just move against you, right? You'll actually have a bearish London session. And what we can anticipate in this daily cycle is that New York session will actually sweep out London's low as a liquidity sponsor. So we'll wait for New York session to open up, and we're actually looking for it to run beneath London session, right? And we're looking for this London low to get taken out as the liquidity sponsor. Now, once we get that sweep of liquidity, we're essentially looking for the entry down here at New York low, and then from there we would anticipate that New York runs to the liquidity. Okay, so that is the New York reversal cycle, and just like the New York continuation, the timing of this low is ideally going to be between 1 and 2 p.m. and this is very, very important when we get into the economic calendar side of things. So those are the two daily cycles that we're going to be talking about today, right? This is what today's teaching applies to. But there are actually 8 different daily cycles that I personally use, whether I'm trading London session, New York session, or I'm trading AM session on indices, right? I have a whole bunch of daily cycles that allow me to accurately predict where the session is going to go. Now, if you want to learn all 8 of these cycles, I've actually put together something called the Daily Cycles program. It contains all 8 of them alongside 7 in-depth technical courses that contain everything that I personally use on the charts to be a full-time trader. Now, if that's something you're interested in, you actually do have a 7-day free trial that you can activate. So I'm going to leave a link to the program in the description. It will be the top link. Now let's get back into the video. Okay, so let's have a look at the impact of these high impact news releases on these 2 daily cycles I've just shown you. Remember, this is 1:30 p.m. UK or 8:30 a.m. Eastern. So when it comes to these daily cycles, okay, down here where we're looking to get an entry, right, on both of these cycles is the same. We're essentially looking for a sweep, right? So some kind of manipulation, right? So an old low getting taken out, followed by a CSD. Okay, that is what we're looking for. We're looking for a sweep of liquidity and a change in state of delivery. Okay, so some kind of bullish order block formation. Okay, that is what we are looking for. Now, through my own personal study, I have found that when we have these 1:30 p.m. news releases accompanied by one of these daily cycles, there is a 75% chance, which is a very high probability, that this sweep and CSD that we're looking for will take place after the release. So knowing those numbers, it's in your best interest to wait for that 1:30 timing, right? Wait for that news release. Wait to see this sweep and CSD before you get into your trade. Because remember as well, that 1:30 release is the biggest economic driver for the whole of New York kill zone. Okay, so it makes sense. If price is going to manipulate from a news release, is going to be that 1:30 release, and I have the numbers to back it up. 75% of the time when we have one of these 2 daily cycles and we have 1:30 p.m. news, the low is formed after the release. So just wait till after the release, and then you can be very, very confident once you get in your trade that this low is going to hold for the session. So let's actually go and look at some examples. Okay, so this first example is on gold. Okay, we're bullish. And as you can see, this purple box, which is London kill zone, has impulsed to the upside, right? So if we're looking to continue to buy, we're likely going to get that New York continuation cycle, right? Where we get a retracement, then New York session opens up and runs to the upside, okay? That's essentially what we're anticipating. We're looking for a low to form with a sweep of liquidity and then to get the entry and catch the move higher, okay? But now if we go ahead and check the economic news calendar, okay, this is the same date, Tuesday the 16th of July 2024. We have retail sales, okay, that's at 1:30 p.m. UK time. Okay, so knowing that we have that release, I know there's a 75% chance that the low of the New York continuation cycle will be formed after that release has already taken place. So what do? We wait for the release to take place first. Okay, so up here, this is before the release. This is 12:45, and if I play it out, okay, the release is here at 1:30. Okay, that is the 1:30 candle. As you can see, if I rewind it, it was an extremely aggressive move to the downside. So let's say, for instance, you tried to get in before. Okay, you see we get the sweep and then we form this CSD. Okay, before the news release, it looked like this. Potentially, you would go ahead and you'd get in and be like, yeah, cool, New York continuation. Okay, but you didn't understand there's a 75% chance price is going to form the low of the session after the release. Okay, so you're offside there, right? You're playing with the wrong probabilities. So wait for the news release. Here you go, 1:30 straight to the downside, and it manipulates the current or the previous New York low. It manipulates liquidity down here. Even if we go onto the 1 hour now, you'll be able to see that we tag this FVG. Okay, so we've tagged that bullish PD array that we're looking for in the New York continuation. Now we have manipulated from the news, okay, we know if price presents an entry, there is a very high probability that that is going to be the low of the session and price is going to run. Okay, so from there, we simply just look for an entry. And if I play it out, you can see price runs to the upside, forming the perfect New York continuation, and you wouldn't have gotten faked out before the news. Also, if you wanted a picture of the potential entry, on the 5 minute here, we got this bullish CSD. You could have entered here off of this FVG. We have this IFVG and order block. We have multiple propulsion blocks here that you could have scaled in off. There was a lot of opportunity for entry after we had that manipulation from the news release. All right, cool. So here's another example. This time we're going to be looking at the New York reversal daily cycle that I showed you earlier. So First, we want to look at what London session has done. Okay, now instead of the New York continuation having a London session that pushes towards the target, this London session has actually retraced, right? It's moved to the downside whilst we have a bullish bias. So it's not going to be that New York continuation cycle because nothing has even started the move yet. So we're going to anticipate New York to take out London's low. Okay, and then from there, we're going to look for New York to form a bullish session and run to the upside, right? That is what we are anticipating. So if we have a look at the economic news calendar, okay, you can see Thursday, the 13th of February, 2025, we have PPI at 130. So because we know we have that 130 high impact news, we know there's a 75% chance that the low of the session is going to get formed during the release or after the release. So we're not even going to try and execute before the release. So we're going to avoid any fake outs that take place there. Then once the low is formed and we get an entry, we're going to be very confident that that is going to hold. Okay, so let's play it out until the news release. So I've jumped down onto the 5 minutes so you can see it a bit more clearly. You can see here, right, before the news event, price was just looking very, very choppy. There was no real clear aggressive move to the downside and upside that you would usually see formed when price forms a low. Instead, it just stalled until the news release. Okay, now this candle here is 130, which is the release. You can see we got this big wick to the downside, right, which has manipulated this low here. And then we get an aggressive move to the upside that has formed the CSD. Okay, so by waiting for the news release, okay, you're going to avoid any chance of you getting caught up in this price action. But also, once the release forms this low at 130 and displaces and forms a CSD, you can be very confident that that low is going to hold. Okay, so once we get that, now we've waited till after the release, you can simply go ahead and, enter off the CSD. Stop loss can go at the low if you really want to. And then, you can just target whatever your bullish target is, right? And if I play this out, it stalls for a little bit, but then it ends up flying to the target. And I actually applied the concept that I'm teaching you to this exact setup in real time. So you know that I personally use this stuff. Now, whilst we're talking about my personal trades, I've actually recently set up a signals group or trade ideas group, whatever you want to call it, where I send in my personal trades. We don't count pips to overinflate profits. We don't send in negative risk to reward trades just to boost the win rate. They are only quality setups that I personally take on my own accounts. In March, we had a return of plus 5.2R. So if you'd risk 1% per trade, you'd be up 5. If you risk 2, you'd be up 10. If you risk 3, you'd be up 15. So if you want access to the signals group, go ahead and join the free Discord, which is going to be the second link in the description. Then on the Discord server, you'll be able to find more information about the group and how you can actually keep getting the signals for free. So now let's get into another example. So the next example is on gold, and in this particular trade we were using the New York reversal cycle. But to actually know why we're using that cycle, we want to investigate what London session has done. So the higher time frame bias is bearish. Okay, but if we investigate London, price hasn't really given us any bearish movement. Okay, if anything, we've actually had a sweep and a CSD to the upside, right? So if anything, we're moving away from the bias. So we're not going to be using the New York continuation because there's nothing to continue, right? We haven't even started the move yet. So we're going to anticipate that London high gets swept and that New York manipulates some kind of liquidity. So London high is a level of liquidity, but you can also see it's in very close proximity to these highs here. And it wouldn't really make sense for those highs to get left behind, because if New York was to go ahead and sweep this and leave it, it would be leaving equal highs. Again, if it was to sweep both of these highs but leave this one, then again we're going to be looking at a scenario where we have relative equal highs. Okay, so really and truly we're just looking for New York to manipulate through all of this low resistance liquidity before running to the downside. Now checking the economic calendar, this is Wednesday, the 13th of November. Okay, that's the date of the trade. And you can see at 1:30, we have CPI, which is a major news event. So again, we're not going to be looking to get into the trade before 1:30 because we know there is a 75% chance that the high of New York session is going to form after the news release. Okay, so if we want to time the expansion correctly, we want to wait for the session high to form after the news release, then we get the entry. Okay, so if I play this out until the CPI release, okay, you can see here 130 wicks through all of this liquidity that we were looking to get taken. Okay, London high is gone. This buy side liquidity is gone. Now is where you would actually go ahead and look for your entry before riding the move to the downside. So if we jump onto the 5-minute time frame and we play it out a little bit more, you can see, okay, that we form a CSD here, right? We form this bearish order block. Okay, so that would be your signal to start looking for an entry, and you could have executed off of multiple PD arrays. Okay, one being this FVG here, right? You'll see in a sec that gets tagged, and then price continues to run to the downside until we take out this low. Okay, so you can see, right, when we're using these two New York daily cycles in alignment with the 130 news releases, we can very, very accurately time when the high of the session is going to form. Okay, and we can cut out losses. You know, we can cut out those fake outs that take place before the news release, and then we can have even more confidence in our positions because we know that high has a 75% chance of holding. Now, one thing before we end the video, before you get on to me, you might be in the comments saying, this is the end of New York kill zone. You wouldn't be executing outside of New York kill zone. Well, if you've seen my other videos and you've seen what I say about New York reversals, so I've got receipts out there because I've said this before. New York reversal cycle, okay, we can look for price to impulse, okay, between 12 and 3 p.m, right, that regular New York kill zone timing. But this specific daily cycle, New York reversal, can actually run through London close, which is from 3 p.m to 5 p.m. Okay, so don't get on to me about this being outside of New York kill zone, okay, because it's valid for this daily cycle. We can tag the entry at whatever time between 3 and 5 p.m. You can see this here, 3:45. When do we hit the target? At 5 p.m. You cannot tell me these aren't insanely accurate, okay? So yeah, that's a very clean example of a New York reversal. So you should go look at it. It's on the 13th of November, 2024 on gold. Yeah, I'm pretty sure that's the video. That is how I use the 1:30 p.m. news releases to accurately predict the highs and lows of New York session with a 75% probability. I hope you found value in this video, and I'll catch you on the next one.